Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Well guys, probably you already know that yesterday's statement of the Federal Reserve hasn't brought any surprises. So in fact they just noticed that they will continue to contract the quantitative easing program for another 10 billions and watch closely on the changes in the economy, since the unemployment rate still stands above the 6.5%, and the recent data on the employment is not very impressive, but still they will continue this accommodative policy in the considerable period of time. So but this information, as you probably understand already, has been priced in even prior to the Federal Reserve statement, since they tell nothing special in their comments, because when the market watch over the Federal Reserve statement, it's mostly has the focus not on the current steps of the Federal Reserve that they will contract for the 10 billions and so on, but they're mostly watching for the comments, what to expect in the future. Market mostly reacts on the comments, but on the recent comments it's really was absolutely something really interesting. Well, it's very difficult to find a reason for that, maybe because that was the last session for the Ben Bernanke, and that will be another chairman of the Federal Reserve, or by some other reasons. But anyway, we can see that market in fact hasn't shown any significant reaction on the Federal Reserve statement, and the situation that we have discussed previously still stands valid. And here trend holds bullish on the daily time frame chart. Market still calling on the tight range. It shows that it looks like the retracement, and our invalidation point for the possible upward reversal stands the same right here. Since any retracement, that's why any retracement, either here as we got yesterday, we will take a look at it a bit later, or even if market will reach the weekly period support one, will not erase the possible upward continuation. Only if market will take out of these lows and continue to move lower, in this case probably we will have to return right back to the bearish scenario. But until this low stands, the upward scenario is still valid, and it is still possible, because this reversal that we have seen on the previous week, it was some sort of the contradictive action, contradictive to the situation that has been formed on the weekly time frame chart prior to this upward action, because market has formed clear bearish pattern, and it should show some deeper move and some continuation reaction on this appearing of this pattern. But instead of that, market has failed to do that and return right back up very fast. That's why this action carries not just some sort of the bounce or retracement, but this could be the breaking of the existing bearish sentiment with this action. It carries much more information than just some retracement or reaction on some support, because this reaction is not logical from the market mechanics point of view, because the normal action on the market performs with some clear pattern, should develop in a different way. That's why until market will hold above these lows, the chances to the upward action still exist. Besides, as we already have discussed, we expect the deep retracement and even a retracement to the weekly period support one, to the 135.40 area, will not be some curious action, because you can see this action to the upside is the reversal swing. So because market here has formed a move up greater than the previous move down, and it's very often market shows deep retracement of the reversal swings, because it has to break the existing impulse to the downside. It has to stop the downward momentum, bearish momentum. That's why, and this momentum presses on the market. That's why as a rule, when the market forms reversal swing, it shows simultaneously the deep retracement. to fade out the existing bearish momentum. That's why I do not see any problems if market even will show move to the downside. Maybe if it will be even better, because in this case we will reduce significantly the potential risk of the taking long position. I don't want to tell that we has to take the long position right now, just blindly. So we need to wait when the market will show some changes in this existing move to the downside. Maybe it will form some patterns or something of that sort, and after that we will assess the possibility to take the long position. But speaking purely from the perspective of the downward action, we could say that as close the market to this low to our invalidation point, that's better from the risk standpoint. That will reduce our risk, and if we will decide to take the long position, this could be really advantage if market will form some reversal pattern right at the weekly pivot support one. Well, what we see right now on the intraday charts, on the 4-hour time frame chart, trend has shifted bearish. That is our reaction on the 2nd-hour support. So if you have taken the long position right here, move your stop to the break even, because that bounce up was really significant. Reaction on this support is great, because you can see reaction was in fact not bad. This bounce up was not bad, but this is not sufficient. So because market hasn't broken through this flag pattern and continue to stand inside of it, now it shows the returning right back down. And in this case, since this will be the second touch of this potential support, I can't exclude that market will really pass to the downside. But that will be okay from the perspective of this potential pattern that we have discussed, this potential head and shoulders. Okay, that's now it's forming. And the area around 135.50, 135.40 area will be a really crucial moment, because if market will pass through it, it will erase the possibility of this pattern. Okay, and in this case, the chances of really the failing of the short-term upward scenario will increase significantly. But meantime, we will keep an eye on this current move to the downside. Again, if you take long here, since that was also the level that we have discussed, we have said that the market should show the deep retracement. Maybe this will be at minimum the 618, and that was the chance. So market has hit the 618 almost. If you have taken the long here, protect your position with the break even, because that is not the action that is typical for the breakout and upward development. That looks mostly as a reaction on this support. Maybe some volatility was added by Federal Reserve statement and so on, but now market is returning right back down, and it's very probable that it could really take out of these lows. On the hourly time frame chart, that's the pattern that has been formed right to the 618 support. That was the butterfly buy. It has worked nice, since market almost has accomplished the 100% action to the upside, right, almost to the top of this butterfly. But now you can see market shows the acceleration to the downside again. So the next target will be 1618. That stands in agreement with the 618 support 135.96, because here market has not quite reached this area. In here we have approximately 135.95 area. But again, guys, as I said right in the beginning of the week in the weekly research, that I can't exclude the possibility that market really could reach this area. So watch closely how this action will develop, because if you take a look at the price action inside of it, that is not the impulse action. This looks like the retracement. That is impulse action. That is the trend. So you can see the thrust action when the market shows the development. But this one, along with crossing candles with the long tails, move up, right back down, almost erase the upward action the same. So you can see it's really gradual slump and choppy price action. It's not really typical for trend. That's why we still will treat as the retracement. Well, and keep closely on the possible pattern that market could form here. So any reversal pattern that will stand in agreement with this, maybe the 618 support, or even with the weekly pivot support one, could be the pattern that we should use for taking the long position here, especially if it will be formed right here. Since the risk will be very small, it will be attractive area for taking the long position around 135.50 area. One thing that we do not want to see, usually as I say, I tell this, we not want to see such sort of action but to the downside. So if the market will form this sort of candle right to the weekly pivot support one, of course we should not take the long position in such circumstances. We need to see the gradual action, smooth action, as it stands right here. We do not want to see the really very fast accelerations to the downside.